Good day. Thank you for joining us for this Stage 1 WebEx recording. My name is Oscar Siguru, and I will be taking you through the process of the following. Number 1 would be adding companies. Number 2 would be adding and terminating an employee. Number 3 would be global payslip definitions. And lastly, benefit funds. When you create a company, please do note that you will need to have a Sage 1 payroll profile. And once you create your profile, you will land on this page. On this page, you will capture a company number. This would be in the case where, for instance, you are running multiple companies' payrolls. And then the company name, let's say it's Sage Pay. Once you're done, you would then click on your cycle details. You would select here, or you would type in your cycle name, and you would select the cycle and the cycle date. You will then choose whether you want to exclude certain options, and remember you might have multiple cycles for monthly, for fortnightly, and for weekly. Once you're then done, you would then finish. Once you've saved those settings, you will then go through the following. You will then enter your company registration number, your payee reference number. You would select, for instance, your industry classification. Let's say we are in construction, and then you will then also go through and select the following: SDL reference number. And then you will also select UIF payment reference number and the UIF registration number, which is with the Department of Labor. The rest are with SARS. Then you will look at the ETI, the standard industry classification again. You might need to select. So I'm just going to select any for the sake of time, and then you will classify if you belong to a special economic zone. You will capture your company physical address and the postal. Should the physical be the same as the postal, you can simply check this option, and then you will capture the SARS contact person and the UIF contact person. Once you're done, you would then go ahead and save, and the company would be saved. Please do note that on the top right of your screen, you will always have this IRP5 validations. Should you have outstanding fields, and should you click on this option, it will tell you exactly what is missing, and then you will then add that detail. If you do not add this detail, you won't be able to produce IRP5s once they're to SARS and to your employees. Now that we're done with creating the company, remember we've saved everything, we're now happy. We can now move on to the next thing, which is adding and terminating employees. When we speak of employees, you will go through to the employee tab. The employee details will be grayed out since we don't have any employees as yet, but then we will add a new employee. When you add a new employee, you can, for instance, enter their employee code, which is key to be identified in the company. You'll enter their name, initials, and then let's say the employee is Thomas, and then the surname, let's say, is Luke. Then you will enter the date of birth, remember with the ID number, and then you will check these options if they are relevant, whether the employee is an asylum seeker or the employee is a refugee. Once you're done with the screen, you will need to look at the tabs. Then you can now look at the contacts tab. In the contact details, you will capture their physical address and their postal address, and should the physical address be the same as their postal address, you can check this option. Then you will also capture the work address, but should the work address be the same as the company address, you will check this option, and then it will populate the work address that you've entered when you were creating this company. Should they work from their physical address, you will then check this option. You will capture their home number, cell phone number, work number, and their email address, and then you will also capture their next of kin emergency contact details. Once you're done with this, we will look at payment details to say how do we pay this employee. Is it by cash, check, electronic transfer, ACB, and SagePay? Some will be covered on our other webinars, such as ACB and SagePay, as to how you can use them. So let's say we are dealing with electronic transfer, then we would need to capture the bank details of this particular employee. And then under employee details, we will capture when the employee was engaged for employment, their title as, for instance, and then if you've got department and pay points, you can simply just click here to add the departments and the pay points. Then you will also go ahead and check what would be used to tax this employee, which is statutory tables in most cases. We do have other options, but remember some are only valid upon application with SARS, and then you can capture the details here. You will also capture the employee income tax number, and then you will check other options such as whether you want to include this employee for SDL payments or not, or to exclude them also from the OID, which is known mostly as Workmen's Comp. And then if the employee is legally retired, and if you want to exclude this employee from tax certificate submissions. Then the next tab would look into ETI, which is an employment tax incentive for the youth. That we will cover on the other webinar. And then, once you're done, you will then go through to hours and rates as to how this employee would be engaged. The normal working hours, if they work for 8 hours per day, for 5 days a week, you will capture all that detail. You can also elect to capture, for instance, the annual salary, which the system will calculate for you, their monthly rate per day and the rate per hour. While the system is still calculating, please do note that all the sections that we've skipped, you would need to complete, as IRP5s will not be produced for the employees if there's missing information. So always be on that lookout for that top right column of your screen where it says IRP5 validations. Now that the system has calculated for us exactly the rates, you can also check the option where it says this employee must not be paid unless hours or days worked are advised. Whether you've got a timesheet system, then you will use that to advise of the hours or the days worked. Once you're done, then you would finish, and then you would have successfully created an employee. And now, as you can see, you can also attach or add a picture of this employee. From here, we would need to go browse for the picture. Now that we've successfully added an employee, we will be able then to go through to their payslip on a month-to-month basis to adjust if there is a need for us to actually look at things such as overtime, bonuses, and so on. Now that we're done with adding the employee on a month-to-month basis, we will then create a payslip. And then, should you wish to terminate an employee, you would see that on the left where it says employees, you will have a list of the employees. Then, you would select whichever employee you wish to terminate, and then you can click on the option End Employment. Then you would say to the system, this employee must be paid up to with a month end, and then you will capture the reason for ending employment. For instance, let's say it's the end of the contract, and then you may click on OK. And then, as you can see, it says employee successfully terminated. And as you can see, employed up to 31st March 2017. So that will be the first and second lessons been covered. Number one, it had been adding a company, and now we've successfully added and terminated an employee. The next thing that we'll look at is global payslip definitions. But before I do that, I will add, actually I will just employ the employee again so that they're active. Now I want to look at the global payslip definitions. What a global payslip definition is, we just want to have a payslip that caters for our transactions as a company. For instance, as you can see on earnings, we are limited to these. Maybe perhaps you've got a different type of earning that you wish to add, then you would add. Another thing, we might have a different deduction. As you can see, we have this as default, but you want to add a few more deductions, then we can add those. The same is applicable with company contributions and fringe benefits. Now, going through to company global payslip definitions, we need to go through to company, and then we will select global payslip definitions. So sometimes it could be that, again, from a language perspective, that we would like to describe certain things in a different language than it is on Sage 1. And we can maybe make use of global payslip definitions for that. Now let's see, you would see that we've got the different transactions and they've got different descriptions going down. So now let's say that we've got actually a petrol card which is taxed at 20%. We can now, for instance, say that this is petrol card, but as you can see, it will cover the fringe benefit aspect. Or if you look at deductions, we've got profit and fund deductions, which is already there, and the company contributions, which is already there. So now let's say that we want to make allowance for additional tax. The best thing to do first is to make a copy of it, and then you can now have additional voluntary tax, let's say for annual bonus. So that's the description that's going to appear, and should you wish to have the same descriptions on reports, you can simply just copy and paste and paste. Then you will select now we've got an additional line which has been added as a payslip definition. It can be deleted because we've edited the one that's currently there, and it is a deduction. And the second thing that we may do also, before, just remember to save. Should you add something like this, you can go to the next tab where it says payslip definition template. So now a global payslip definition would be a transaction line, and then the template is the transactions that you want to have on your payslips. So if I go then to my payslip template, as you can see, I now have that additional voluntary tax for annual bonus here, but if it wasn't there, just do this first. Let's say it wasn't there. Then we would click on add. We would see it here. We will then check it. Then we would click on add. It will now make part of our deductions, and then we would save. Do you remember that because this is a template, you might want it to be a template for a specific company? As you can see, it says link to a cycle, and there are different companies to my right where you could link this tax on additional tax on additional tax for annual bonus. There it is. So once I save, it means that I want this to be on all the companies that I use. And as you can see, should I now go back to my payroll and I click on my payslip, it will default me to the very same payslip that I had for our employee, Thomas Luke. And then from here, I could simply add, and as you can see, I now have that additional voluntary tax for annual bonus. Should I then select it, I will be able to then create a transaction on it. Now you will see that here you can now tell the system that I want you to deduct an extra maybe 250 for 6 months, or if you don't want monthly, you can say every month. And once you click on OK, it will now, if you click on back to payslip, it will now have that additional tax deduction. And that's how you would make use of global payslip definitions. And then when it comes to benefits, you might have two types of benefits, one which is a private benefit, or a second one can be a company benefit. So we'll first look at a private benefit. For instance, this employee has medical aid, but they're paying it on their private capacity. So in order for them to take advantage of that, we will go through to the benefits tab. We will add the medical aid. We will give the information to the system. We will give this following information to the system as to how much does the employee pay and from when they started paying, and should the employee have additional beneficiaries, we will add them. Let's say we've got first dependent, and then once we're done, we will then have to save, and you will see it will take 2 medical tax credits into account going forward. If now I go back to the payslip, we would have seen that now our net has gone up because of the effect of the two medical aid tax credits. And if you look under transactions, you would also see that the applied medical tax credits at times 2, 303 times 2 for the 2 employees. That will be in the sense where there's a private benefit. I do want to mention that it can have a private medical aid, and you can also have a private retirement annuity. Just note that you cannot make use of a private medical aid and a company medical aid at the same time. So meaning that I will show you now how to add a benefit fund. As you can see under setup benefit funds, you can have a medical aid. For instance, you can just give it a name, Discovery, and then you will give it a scheme, for instance, and then you would save. Another benefit fund. Remember at Discovery you might have multiple schemes, then you will need to add all of them. And the second thing, under Provident Funds, you will add Provident Fund. You'll give the fund name, let's say it's Old Mutual. You will get the clearance number, then the description would be, for instance, let's say it's the moderate fund, or you can tell the system that it's a calculation or a fixed amount. So if it's a calculation, you will then tell the system that based this on fixed pensionable earnings, or whether a percentage of specific earnings or specific earnings. So we'll just go for the first option, and then you will tell the system that it will be based on maybe 10%, and then you will tell the system that the contribution type would be a defined contributions plan, and that the employee contributes maybe 5% and the employer 5%. And once you save, you will then see that the benefit fund will appear on your left. The next thing would be pension funds, which is quite similar to the Provident Fund. Under the pension fund, we might also have what? The Sanlam pension fund, for instance, with its clearance number. And now we'll say use fixed amount. And let's say this is the high risk. And then the calculation will be based on a percentage of specific earnings. Then you can tell the system that it's based on what? Let's say 20%. of the following earnings: your fixed salary and commission. Then you would tell the system that it's a defined contribution, and that maybe it's 5% and 5% for employer and employee. And you will see all the funds are now showing on the left. And from the employee point of view, on the payslip, what you can then do as the payroll administrator, you will be able to add, for instance, things such as pension on their payslip. They'll tell the system that this employee belongs to this pension as of the 1st of March. And then once you click on OK, expect all those calculations to be taken into effect based on your setup. There's my pension. Remember, it's based on 10%. There's the 250, and there's the deduction, and there's that fringe benefit. And then that's how you would deal with private and company benefit funds. And now you'll have your pay slip, and then you can run your payroll, print the pay slips, and then roll over to the next periods. Just remember that to be always working in the correct cycle when you are running the pay slip. So in this video, we've learned the following. Number 1, how to add a company. Number 2, how to add and terminate employees. How to deal with global payslip definitions and templates. And lastly, how to set up benefit funds and use them in the context of a payslip.